So onto the income and expenditure account. We've already put a couple of numbers in here. So what we'll do is I'll just list all of these, the numbers that I got from the receipts and payments account, and then we'll deal with any of the issues. So we're going to have things like depreciation, equipment depreciation of buildings, etc. That all of those are going to have to go in here as well. So we've I just try and go sequentially through this. So catering receipts and catering purchases. So I'm going to put the two of them together and call them a profit. The receipts is more than the purchases, therefore it's a profit. I don't need to do a trading account because there's no stock mentioned or at the beginning. There's no catering stock at the beginning. Is there catering stock at the end? I think there was. Yeah, catering stock 400. So that's going to be a prepaid for next year. So that's we're going to take that away from the catering expenses. So catering receipts is 8.5, catering purchase 4.9. Of the 4.9, 400 is carried over to next year. So therefore it'll be 4,500 is the catering purchases that we're going to use up this year. Take that away from 8.5. So that means catering profit is $4,000. Okay, so I'll just put the numbers in just to show the examiner know what I'm doing. So 8,500 minus 4,900. Okay, and from the 4,900 we're going to take away the 400 closing stock. Okay, bar receipts we've dealt with because we've done the bar trading account and the bar profit is put in there. Entrance fees. No expenses to do with entrances, so I'll just put that in as expense. Now, might have a quick look and see, are there any entrance fees due at the end of the question? Life membership, grant, nope, there's no other mention down there of entrance fees due. So therefore the entrance fees figure, I'll put that straight in. So $12,000. Annual sponsorship is a regular money coming in. So that's another income. National Lottery grant is 15.5. So we've already read the note on that and it's listed as a revenue item. Competition receipts and competition purchases, competition prices, we have the two of them there. So if put that in. So competition profit. So 28 minus the prizes 2,100. So that's 7,900. Transferred from a building society, that just means that money we had in the building society account was transferred in, so that's it's not an income of such. It just means that if we look at our opening situation, does it mention anything about a bank account up there? No. So if we had a building society bank account listed up here in the opening statement of affairs, that means that we already had money in a bank account. Because we didn't, then that has to be treated as an income into the business because it's not money already was in the business, so that's going to have to be an income. Because we didn't already have it, just making sure we were aware of that. So moving on to our expenditures. I'm just going to skip a line here just to make it easy to see. Now, so we dealt with bar purchase and the bar trading account. The balance is just our bank figure, which we've already dealt with. Purchase of equipment, so that's not an expense, but it is going to make a difference when it comes to calculating the depreciation on equipment. We'll deal with that after. Sundry expenses. So sundry expenses 81,500. Now there may be later on if we can't. If there are expenses due or prepaid, we may have to adjust that figure, but I'll put the figure in as it is there now. Competition prize, we dealt with, we did the competition profit. Coaching expenses, 5.6, put that in. Now I remember that there is something that needs to be adjusted with that, so I'm just going to put 5.6 in there, and we'll come back to it in a second. Bank loan, we've dealt with the interest in the bank loan, so that's that. Okay, so now we need to move on to what's down the bottom. So we've dealt with our catering profit, and we've got a closing stock here of 13.6. We'll put that in the balance sheet after. Bar debtors and creditors we've dealt with. Investment interest due at the end of the year. Okay, we've dealt with that when we did our investment income. We have that figure up there. So subs, so I haven't put that in, so I need to give ourselves an extra bit of room to deal with our subs. Now, so the figure for subs, I hadn't taken that, so 126,900. So there were five new life memberships, so that was included. We'll have to take it away. And we've already calculated the number for that when we did our opening statement of accumulated fund. Life membership due is 15 grand. Okay, so that 15 grand came in. Subs prepaid for next year. Okay, that's going to be taken away as well. So that's 900. That was all included in the 126, so we're taking it out. Levy, so there's a levy reserve is going to be increased, and that was included in subs. We're taking it out of subs and going to transfer it into levy. So levy for 2018. Now, so it's €50 each multiplied by 600 members. And then there's a levy for 2017. I think I just made a mistake with the previous number, so that this one should be 50 times 20 members. And the previous one is, no, I have that right, so €50 each times 60 members. So this is going to be 50 times 20. And that's a minus. Now, that's to do with last year. So let's just make sure, did I put that number in here? And there's a levy due, which is not mentioned here. So I left it out of my original statement of accumulated fund, so that makes a difference to the end there. Actually, just check. Okay. Right. That's 1, 2, 3, 4. That's all of them dealt with. So there's the real figures. Now we have to deal with a life membership write-off. So let's look and see what our life membership is, because we've got new life memberships that have been added in. So our life membership at the moment is 45,000. And we've had another 15,000 is being added into that. Actually, sorry, I just realised that life membership due, that's an additional figure, so that life membership due was not originally included, so we'll need to come back and have a look at that and take that out. But when I go to do my balance sheet, I'll have life membership. So the life membership is going to start off as 45,000 plus the 15,000 from the new people who added in, and so that makes a total of 60, and then we're going to take away from that. We're going to be credited, so we're going to take it away or reduce it over a 10-year period. So I'm going to take 1/10 of that away, so 60 grand minus a tenth is 6 grand. So that's 54,000. So the life membership write-off is 6,000. So getting back to what we have up here, the life membership due I put in, that was a mistake. There should have been a levy due for 2017. Yeah, so those 5 new life memberships, that should not have been included, so that's my mistake. I'm going to take that out. Now, 1 second. Now, so there we have all of those in there. Life membership 2017 was 15 grand. Okay. We've dealt with that. Writing that off. The grant is for day to day. It was a revenue item. We've put that in there as a grant of 15,500. Equipment. It was to be depreciated at 20% of cost per annum, and Clubhouse depreciate 2% of cost. So depreciate equipment. So what was the equipment originally worth? Equipment was worth 26. But we also bought some equipment, if I remember correctly. Let's have a look. So we bought some equipment for 15 grand. Now, yeah, so what I'll do is, because we bought the equipment part of the way through the year, we can't give it a full year's depreciation. Just quickly checking the rules that we've put down for it. Equipment owned at the end is depreciated 20% of cost. Okay, so normally 20% of cost per annum. Yeah, so it says equipment owned at the end of the year. So though they said that we bought the equipment 9 months into the year, so that means I would give 9 months depreciation for that, and the other equipment at 26 grand, I'll give it a full year's depreciation. So I'll get back down to this here now. So depreciation equipment should be 26 grand times 20%, plus the new equipment, which was 15 grand, times 20%, times 9/12. Depreciation of buildings. So the buildings, Clubhouse and Courses 550. So 550 times 2% depreciation. So that's that listed there. And Clubhouse and Course. So wages due were owed to the club coach. Provide for further. Okay, so the wages figure that we had is for coaching. So we've got coaching expenses 5.6. Okay, so from that we're going to take away the figure that we have at the beginning. So wages due 1640. Because that is nothing to do with this year. That was money that was due from last year. And I think there's another figure that's owed at the end, if I remember correctly. So wages due for sort of another 2,000 wages due, 2,500 wages due at the end. So there's no wages here, so I'm just going to delete that wages expense. Okay, so just check I have all of my expenses in. So I've got bars been dealt with, catering's been dealt with, purchase of equipment, I've depreciated that. Sundry expenses, 81, I have that. Coaching competition prizes, we've dealt with coaching expenses, I've just dealt with there now, and we've got the loan interest. And that's that. So now from that I should be able to work out my add up all of my incomes, take away my expenditures, and work out my overall surplus. So I'll let you finish that off.